Tuesday, November 1st, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at the Eurozone and how I think its economy is on the brink of a huge slowdown, mainly because monetary aggregates are actually shrinking, which is actually deflation. Yes, and we'll go over the definition of inflation because it's very confusing. And it's one of the reasons why I've always said that we have to look at the true definition. Before we go into the Eurozone, which of course are the countries in the European Union that use the euro, we're going to look at some news that have come out this morning, which I think are significant for the UK economy. One that is huge is the nationwide house price index. It was expected to drop from 9.5% growth year on year in September to 8.3 in October. It dropped to 7.2 year on year from 9.5 in September. And more importantly, it dropped by 0.9 month on month. I think that's a huge surprise. Well, actually, it's not a huge surprise. As interest rates, mortgage rates have gone up, there's been a lot of withdrawals of mortgage deals from the market. And I think it's getting harder and harder for people to sell their homes. So they lower the price. And coupled with what we're seeing here from the UK, that the new Prime Minister is looking to raise taxes for everyone. And the Bank of England is going to continue to raise rates. I think our economy is in bad shape too. I'm not sure how they're going to be able to cope with this, the government. And why do I say that? Well, because the government is the biggest borrower in the country. Maybe what Sunak is trying to do is to really, ratchet up the pressure on us so that the Bank of England can then slow down or even cut rates so that the City of London keeps getting its profits. I think that's what he's doing. So it says here, Sunak give the signs off on tax rises across the board to help plug 50 billion hole. So I don't think it bodes well, for the economy here. So now back to the Eurozone, and I have to thank Thorsten Polleit. He's an economist in Germany at the University of Bayreuth, and he and I have been in contact for a long time. When I worked in the city, he used to work for Barclays in Frankfurt. And why was I in contact with Thorsten? Well, because he writes for the Mises Institute. He thinks like I do in economic terms. He's a proponent of the Austrian School of Economics. And he recently posted this on his LinkedIn. And it says, Euro real money stock shrinks, recession odds rise. So you can see here this chart, Euro real money stock M3 year on year in percent. I mean, it hasn't, this is the sharpest drop ever since the euro has been around. So that's deflation. And that's why I've always told people that the real definition of inflation is this one here. And this one I took from my old Webster Pocket Dictionary from the 70s. Used to be my dad's. And it says, inflation, an abnormal increase in the volume of money and credit resulting in a substantial and continuing rise in the general price level. So as you can see, we've had continued inflation since 2012 in the Eurozone. So how come the CPI came out really strong yesterday for the Eurozone? I think it was 10.7. It was higher than expected. Well, because that's not inflation. That's the consumer price index. And I'm going to reference then Human Action here by Ludwig von Mises, who is like a big guy in Austrian economics, right? And what he says about inflation, and this is on page 427. I think you can find a free PDF of this online, or you could go to the Mises.org website, and it says, the course of a progressing inflation is this. At the beginning, the inflow of additional money makes the prices of some commodities and services rise. Other prices rise later. So I think what we've had in this inflation, not just in the Eurozone, but also in the UK and in the US, is that the money or the currency and the credit is flown into financial assets for the last 10 years, up until recently, of course. And that's why we've seen stock prices up, bond prices up, real estate prices up, because mortgage rates have gone down and mortgage bonds have gone up in price. But what we're getting this year is that it's flowing, all this money and credit is flowing into hard assets, real assets that we need for everyday survival. And I do admit that the supply of these commodities and things that we need every day has shrunk because of supply chain problems, because of the war. But as you can see, we have had inflation. So that's why it's confusing. How come CPI is rising while M3 is actually negative? Well, it's because of what von Mises says. And he continues, the price rise affects the various commodities and services as has been shown at different dates and to a different extent. The first stage of the inflationary process may last for many years. While it lasts, the prices of many goods and services are not yet adjusted to the altered money relation to the inflation. And I think that's what's happened. We've had this 10 years of monetary inflation. And yeah, granted, CPI is doctored a lot in every country. And I think prices were rising a lot more than like 1 or 2%. But now it's flowing into those goods. And that's why Christine Lagarde, the president of the ECB, was so shocked. She said inflation came out of nowhere. We didn't know it. Well, what she meant is the rising prices, the CPI came out of nowhere. But if you know about inflation and the way the Austrians look at it, you know that that's not true. We've had massive inflation since 2012 in the Eurozone. So I think that's going to hurt the economy. Why is that? Well, because currency and credit are shrinking. So the banks won't be able to lend as much to the economy. The other thing as well, the supply chains, of course, are killing off German industry, German small businesses. So it's a huge mess. And the other thing that I noted yesterday, and this came out on Reuters, and this is JP Morgan warning that they expect the Eurozone banks to repay 500 billion to 700 billion euros of ECB TLTRO loans in November. Why is this significant? Well, because when banks pay off loans like that, especially 500 to 700 billion, it shrinks even more the money supply. And you can bet that that's going to disappear and the economy is going to be in even more trouble. So that's why I think the Eurozone economy, but also our economy here in the UK, are in trouble. And yeah, it's going to be a rough, cold winter the next few months, not just in the Eurozone, but the whole of the EU and the UK and in the US as well. I spoke about this on Saturday about the diesel situation. That's still up in the air. That could affect the economy greatly. And I'll put it up in the cards, the video from from Saturday, and you can watch it if you haven't yet. So yeah, that's what I wanted to talk about today. So now we can quickly go through the markets, see where they are this morning. I saw a headline yesterday saying that October was the best month ever for the Dow. It sounds really good, right? And I guess it was, but it's still down on the year. And usually when you're in a bear market like this, the rallies are really strong, the counter trend rallies. Am I saying the Dow is going to crash? No, I'm just letting you know that it doesn't mean much, those headlines. And of course, that was from the mainstream media. So it's 8 a.m. London time. We've got spot gold at 1648. It's up actually $15 today. So gold doing pretty well, just under 1%. High's been 1650, low 1630. Silver is up 58 cents or 3%, 1974. High's been 78 and the low has been 10. So yeah, that's encouraging. I'm not sure what's happening. I've seen that US yields have dropped overnight, even though I saw a headline that from now till the end of the year, the U.S. Treasury is going to have to issue an extra $150 billion of debt. And that sounds a lot. But anyway, let's keep going. The Dow futures is up 0.2% or 200 points. The NASDAQ 100 future is up 1%, 118 points. And the S&P 500 is at just above 3,900. It's up 34 points. Just under 1%. The FTSE is up 100 points, 1.4% at 7205. Eurostoxx 50 is up 50 points, 1.4% as well at 3668. To the currencies, sterling is up just under 0.2% at 115.36. Same thing for the euro, up about 2/3, 99.41. And the dollar is down 2/3 versus the yen, 147.68. Dollar's down 2/3 versus the Swiss franc, 99.51. And the dollar is down 0.75% versus the yuan, 728.22. Dollar's down 0.5% versus the ruble, around 61.50. To the other currencies here now, Aussie dollar is up 0.75, 64.47. The dollar's down 0.5% versus the Canadian dollar, 135.40. And the Kiwi dollar is up over 1% at 58.80. WTI crude is up almost 2%, 87.67. Brent crude is up 2%, 94.50. High-grade copper is up 2.7% at 3.45. And U.S. nat gas is down 2.5% at 6.22. Dutch TTF futures, let's have a look where that is. That's down 3% at 120. So yeah, it looks like financial assets, commodities are all up today. The dollar is down. And with what we're seeing in the Eurozone with the deflation, and it's true, the M3 is shrinking, and we've seen that in the US as well. Rafi Faber has covered that. Unprecedented monetary deflation in the US. He's spoken about this, as you can see here. What do I think is going on? Well, I think the central bankers are going to realize that the economies are grinding to a halt, and they will need to reinflate. They will need to maybe pause or maybe not raise rates as much, stop QT, and that's going to make these monetary aggregates go again. And all they've gotten for the tightening is a correction in asset prices, but not in consumer prices, because consumer prices are still rising. So I think consumer prices are going to be a nagging problem for central bankers. And remember that they call consumer prices inflation. And as I said, it's all upside down and confusing. But what I would say is that the fiat currencies are going to continue to be debased, because that's what they need to do to keep this system going of fiat currencies. And I'm almost certain that they're not going to allow these monetary aggregates, like in the Eurozone, the M3, and also in the US, stay negative for too long. So that's the way I see it. So if you enjoyed this video, make sure you hit the like button. Please share far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day. Take care. Bye.